Hello there, beautiful traders. Welcome back to my channel. My name is Desmond Samuel, and this is yet another episode of our weekly Forex Outlook. Now, in case you're just coming across this channel for the first time, now this is a segment of my YouTube channel that I have dedicated to coming on here every single weekend to give you guys the best trading opportunities in the market as we speak. Guys, honestly, all the way, all right, the market is about to give us a lot of money. All right, now, if you're new to this channel, if you're an existing subscriber, make sure you sit back and listen attentively. All right, make sure to take screenshots of my levels. Feel free to rewatch these videos and learn how I plot my levels and how I analyze these trades. So I have about 6 or 7 pairs to talk about here, and without wasting any much time, let's hop onto my screen. So the first pair on my list here is EurUsd. Justifiably so, guys, this is the easiest pair to trade for newbies. For experts, this is just easy. It has the cleanest price action, and then this is the most traded financial instrument in the world. So yes, it is easy because billions of people are looking at the exact same thing. All right, so without wasting any much time, we have the top-down analysis approach here, which is the from the higher time frame here. So I come. So what we have here from the weekly time frame is that we've had this we've had this I don't know why I extended this thing all the way. Hold on, guys. Check something. This is way too long. Way too long. Oh, bro, this was supposed to be a key, a minor level. I don't know why this is. Charlie, scrap this. Sorry, guys. So yeah, we did have a drop on the weekly time frame here. All right, so yeah, so that's it. So we had this drop on the weekly time frame, and since then the market has just been playing around this level. Now the only pullback to this level we had was this minor level, which was this minor pullback here to the supply level, and since then we've not had any decent pullback, and this was the decent pullback. Now for every trend or for every stretch, there is always an equal and a resulting pullback or a consolidation. So the market only trends for just 40% of the time, and then the rest of the 60% is stuck in a box, moving sideways in a range. All right, and that's what happened here, right from the start of 2023 and up until this is early 2024, an entire year literally in a box. All right, so this was the collapse. This was the resulting pullback and consolidation. So let me just hop onto what we have here. So scaling down to the daily time frame here, we have something lining up nicely. Now we had a trade inside of here, which I called out once again. If you're new and you doubt me, go back and check my previous videos. All right, so check this playlist of the weekly outlook. You'll find it there. So I think that was like episode 5 or episode 5, episode 4, thereabout. I think it was there. So long story short, this is where we're at, and I highlighted this supply level to you guys. I said we do have a supply level somewhere around here that the market was definitely going to come into, because that lines up. See, listen, the market likes liquidity. The market goes towards liquidity. It runs towards liquidity. It goes from liquidity points to the next liquidity point. All right. So your best bet is to align your levels according to these liquidity points here, because those are magnets. So this was the first pullback here, and then I said to you guys that fret not that we should actually have a deeper pullback, because this was a supply level that wasn't tested properly. This pullback was not did not really do much justice to the length of breakout. Now this was the length of breakout, and then typically we should come in at least half of this, and that wasn't really nice. So we fell further, and then we came in for the proper pullback, which is this. All right. This was way too linear. So this was the proper pullback we had here. And long story short, the supply level held, and we have reacted off of that, putting a double top. All right. So now we have a break of structure here that is happening on the daily time frame. So the FOMC numbers came out. Pause the same figures as a recent rate hike. All right. So that was the market reacted in a bullish way initially, and then all of a sudden we came and retraced all the way back down. All right, which means the Feds are still adamant on their rate. So quite persistent with that. So we do have a structural break here. So this was a low, this was a high, higher low, higher high. technically we should actually come and put in a higher low than put in an equal high or a higher high, but that didn't happen. Instead, we failed and we put a lower high from this recent high, and then now we've broken structure to the downside by putting a lower low. All right. So now everything is pointing south at the moment. However, now mind you, we do have some form of demand level here, which was where this market rallied from all the way back in the February 29th, nearly a month ago. So we actually came on here and then we rallied all the way up. Now Fibonacci, from a Fibonacci standpoint, we didn't have a decent pullback, all right, to this particular thing here. Instead, we just had a minor break and retest. However, this is the only decent pullback at the moment. Now I'm speaking from a bullish standpoint now, yeah. Now I'm actually very bearish on this pair. I'm speaking from a bullish standpoint. So this is what's happening at the demand level now. But you should not be afraid. All right, do not be afraid because we've cleared this trend line. All right, so everything is pointing south at the moment. We're actually quite bearish. I'm bearish on this guy. All right, I'm 70% bearish, and then I'm 30% bullish on this EurUsd. So I like to see. So how do you take up opportunity of this how do you take this opportunity now? So the first thing is that you have to scale down to the 4-hour time frame and wait for a decent pullback to this recently broken structure level. All right, something like this. We need to see the market coming to test that 1.08543 region, all right, somewhere around here. Because if you look, the only pause in this entire drop that we had there was somewhere around here, okay, and then we collapsed further. So the market needs to come back and test this minor supply level here, and then we should actually collapse all the way further. So my first level target for the euro is 1.07407. Now, reason being that if you look left, all right, that was exactly where the market started. Actually, first level target is always 100% retracement of the entire for which is here. Then my second level target is 1.07422. All right, so we have about 50 pips here, then 50 pips here, roughly 100 pips. Now, in the event that we do actually clear this 1.07450 region, we should actually see the euro collapse all the way to 1.05394. Now, that is not a short-term target, that's a long-term target because this might take a month or even weeks to play out, all right? But it is entirely up to the market. The key thing for us is to show up daily and do exactly what we have to do, all right? So that is that about the euro. I'm actually super bearish on this guy. A pullback here will be very decent, all right? Pullback, we drop it, all right? Easy peasy. So the next pair on my list would be NzdUsd. Actually, let me go step by step. So we have cable here, GBP USD, something very similar to the euro, right? Something very similar to the euro from the higher time frames. We are actually very bearish on this guy on the higher time frames, and then we're back in the box. We had this fake out here to stop these early buyers. All right, stop the early sellers. So they've breached both sides. And technically, what tends to happen is that whenever you have a fake out like this, market tends to move in the opposite direction to some really juicy amount of pips are exponentially. So now what we have in our hand here is a break of structure. Okay, now sorry for the too many lines. I'm just trying to be as careful as possible to mark these zones out carefully so you know exactly how to trade your levels. So we have this fake out here, and then we had this fall back down, and then a retest collapse. Now this is exactly how we're going to be trading this guy. We have to come back and see a pullback anyway. This is a start of a trend. All right, this is a high, this is a low, lower high, lower low. We need to see a lower high here before we join this guy to drop, all the way to 1.25341. All right. So my prime target for the cable is 1.2. Actually, let me just put this at the candle close. 1.25356, right? So, however, before we take a trade on this guy, we must see a pullback to this point here. Pullback to this point, then we collapse this guy all the way to the downside. All right, it's just easy. When the time is right, you can scale down to your 4-hour time frame or 1-hour time frame or whichever time frame you trade. But just make sure that you're trading in the direction of the overall trend, which is actually the current trend is actually bearish, and the overall trend is still bearish at the moment. So we need to see a pullback into this supply level here, this minor supply. Whenever you see the market do this, just know that there is a supply level somewhere around here. That's created a supply level, and it always come out to test it. Right? It has to come out to test it. However, I see a trap here, like it may stop out early sellers. So I'm actually waiting for this Fibonacci level to get activated. All right, so let the market pull in deeper, and they will actually drop this guy on his head all the way to 1.25350. All right, so that's my prime target for the cable GBP at the moment. Now, in the event that we do blow through this particular demand level here, we should see the euro rally or drop rather all the way to 1.23917, and that's about the cable. The next pair on my list is AUD/USD. Now, I'm not really a big fan of AUD/USD. If you know me very well, I'm not a big fan of this guy. This guy is one of the most disappointing pairs anybody has to trade this year, man. Been very, very, very choppy. Nothing really, really exciting. Just everywhere, man. Even from the higher time frames, it's just anyway for analysis sake. Because I know that there are a lot of you guys out there that actually trade this, so I'll just talk about it anyway. So the overall flow is south bearish at the moment. Actually, overall time frame, the bigger time frame, weekly time frame is actually heavy bearish. Heading south. Okay, series of lower lows and lower highs. And now we've come in here to this point where we have we kind of had a battle of Fibonacci. We will have the head and shoulders pattern. You have head and shoulders pattern here again, and you have the Fibonacci. They have the Fibonacci. It was quite confusing. All right, so the pair was quite indecisive. So I had to wait. I sat on my hands because I mean, first of all, I'm not really a big fan of this pair. I don't like it at all. It has the most disappointing moves ever. It's just very dirty and very messy. However, you know, whatever makes us money, we come back to it. I can't believe I'm slandering this guy like this, but it's ugly. It's very ugly. It has the ugliest price action. So long story short, enough of the banter. Sorry, but I hate you, guy. I hate you, AUD/USD. I don't like you at all. We have so what is sitting on our hands now? We have a break and retest. Okay, let's go with the current trend. So this is a high, this is a lower high, which is also a break and retest, which also lines up with the Fibonacci point, which also lines up with the right shoulder of a head and shoulders pattern, head, shoulder, head and shoulders reversal pattern or continuation pattern in this case, because the overall trend is actually bearish. So we do have a head and shoulders pattern happening here, and the only way to validate this is if we break this neckline and pull back. All right. So we are actually sitting on the neckline here. So two things holding this guy, two conditions have to be met. We have to clear this supply level, this demand level, and we have to clear this trend line. Otherwise, I'm not taking a trade on this. I don't even like it to start with. I don't like this pair to start with. So if I see if it doesn't give me extra, listen, on euro and on every other pair, I'm good with three conditions being met. But you see this guy, it has to meet at least five, man. I don't it has to meet at least 5 or 4 conditions, to be honest. I don't like this guy at all. So a weekly or daily candle bearish engulfing break and close in here and a pullback. We should see AUD/USD drop all the way to 0.62888. You heard it here first. This is a high, this is a lower high. You see a lower low here and a pullback. We should see this guy drop all the way to 0.6292 rather. Let me just put it on the candle close. Reasons best known to me. Candle close. All right. So we should see this guy drop all the way to 0.62955. Should the dollar keep up with the momentum that we are seeing, which I'll be showing you guys in a short while. So I have no trades open on this guy. I have no trades open on any pair currently. So I like to see us clear this level. Once we clear this trend line and this minor demand level here, we should actually see this guy rally or drop once again. Desmond drop to 0.62955. All right, and then once we breach this target, we should see this guy at 0.6000, which was always my prime target. So we do have in our hands here potential 520 pips. First of all, 200 here, then the remaining 300 here. All right, so that's about the Aussie dollar. How do you take advantage of this? It's very easy. A daily bearish engulfing candle break and close. Let's clear this place, and then let's clear this place. Once we have collapsed, pull back, then that's fine. Okay, we need to put in a bearish engulfing, a decent, healthy bearish engulfing candle, and then pull back. Then we drop this guy to 0.62955. All right, that's about the Aussie dollar. The next pair on my list is NzdUSD. All right, so NzdUSD has the best. They need the cleanest price action at the moment is NzdUSD. Now let's go from the higher time frame, because I like to work my way all the way down from the higher time frames. So this is overall very, very bearish on this guy here. Now I have been calling this guy out for being bearish because I saw it as a trap. I wasn't really convinced that this guy was gonna rally because we had some barrier here, and the overall flow was always gonna be bearish because it has been like that for a very long time. Okay, so we came in here, we reversed, put in what seems to look like an inverse head pattern, retested the neckline. We were actually pointing north. However, we failed to break above this left shoulder, which also served as a resistance in the future. And instead, we put in a lower high from the recent high. And now we've come to clear this this demand level, and we've cleared this trend line. So everything is pointing bearish and everything is pointing south. All road leads to 0.57978. So my prime target for NzdUSD is 0.57978. If we do bridge this level, we should see NzdUSD at 0.55656. All right, so how do we take advantage of this? Easy peasy, scale down to your lower time frame, 1 hour time frame, whichever time frame. But however, wait for this guy to give us a decent pullback. All right, let's see the market pullback, something like this. Let's just see a pullback here. Okay, and just when the market is about to drop, you hop in. Okay, just that bounce. Once you get that bounce, you hop in on your 4-hour time frame or your 1 hour time frame. Be whatever time frame you trade, I don't care. Just move in the overall direction, so you be on the safer side. All right. So my prime target for NzdUSD, provided we stay below this bar, is 0.57978. All right. So the next pair on my list would be, I think, AudChf. Now this pair has been giving me reversal vibes. It has been giving. Nah, not you. It's ugly. Ugly NzdChf. So AudChf has been giving me some form of reversal pattern vibe. However, I failed to sustain above this key level now. So I've been very, very bearish on this guy for a very long time, guys, from like last 2 years, right? Last 2 years, we've been bearish. However, we hit a stumbling block where the market just failed to break below. Instead, it came into putting a triple bottom. And from my experience, this is a reversal chart pattern, a reversal of this entire drop, all right? And this is happening on a significant time frame, which seems to be the weekly time frame. And every single thing pointing bearish has been taken out. Actually, mostly every single thing, not everything yet. Most of the things pointing south have been taken out, including this trend line here, coming from all the way from the highs of 2022. We've actually broken out of there, and we failed because of the bearish pressure at this level here and lots of liquidity here. We failed to sustain above there. So I'm actually sitting on my hands currently until I see a decent weekly engulfing candle, bullish engulfing candle, or two daily candles break above this key level. I am convinced we need to see a sustained break above this level for us to even have a chance of rallying all the way to 0.61500, right? Something here, which is about 250 pips thereabout, roughly. All right, so we need to see two daily candles break above, or a bullish engulfing weekly candle break above here. We did peak here, however, we dropped back. All right, so now the reason as to why I'm actually starting to shift to the bullish side of things on this pair is because we have balanced out 3 times. Okay, and then we have started to put some form of trend here where we'll have the low, the high, higher low, higher high, higher low, higher high. So maybe we're just going to put a higher low here, and then we actually break above. There is a significant chance of us breaking above. All right, so that's why I'm 50-50 on this guy. Now, provided that we stay above here, should we, in the event that we actually come and break this structure and to the downside, we are actually exposing the 0.56400 region. All right, so if we break below this bar and this trend line, we should actually rally a drop all the way to this point. I don't know why I keep saying rally, because the dollar looks like it's about to rally. Sorry, guys. So that's that about AudChf. Nothing much at the moment. I'm still watching this guy, so we have to give it maybe another 2 or 3 weeks before this guy actually decides. The next pair on my list is UsdChf. Now, this pair has been a madness. Over the previous week, it has been madness, literally, guys. I've been. You see, one thing about me is I'm extremely. No, not you. What's this mess? I have been extremely cautious with the way I trade the financial markets, which is exactly what I advise you guys to do, is that you have to be very, very careful with the way you approach the market. Always leave no stone unturned. I said to you guys that, what is this, Desmond? What is it? These guys keep giving me different charts. This is my charts. So I said to you guys that provided we stay in the box, I have no trade on this guy. Now, reason being, I noticed something that we just bouncing. Listen, we bounced up, failed to break, bounced below, failed to break, bounced up, failed to break, bounced below, failed to break. I boxed the guy up. I don't have time for nonsense. All right, you have to be decisive. If you're gonna go up, you have to break above this level anyway. If you're gonna come down, you have to break below this level anyway. So it was just entirely up to the market. I didn't even give it any chance to convince me otherwise. As long as you're in this box, I have no business with you. And well, unfortunately for UsdChf, FOMC chairman Powell came in and did his thing, and we actually blew out. Okay, so we ended up putting a daily bullish engulfing candle that engulfed one two. That's the previous 2 days action, and then now we are this was the first pullback here. All right, the breakout first pullback, and then we are due. I think we are almost due for a decent pullback before we actually start targeting areas such as the 0.90500 as our prime target. So how do you take advantage of this? Is very, very simple. Scale down to the 4-hour time frame. Anticipate a pullback. A healthy trend must have a decent pullback. All right. So I anticipate a pullback to the 0.887717 region, and then we should ride this guy all the way from here. Or we could actually see a deeper pullback to come and balance out at this demand level before actually the rally. Whatever the case is, I'm actually very bullish on this guy. I'm bullish to the tune of 80% and bearish to the tune of 20%, because every single thing that counts as a downtrend has been taken out, including the trend line. All right, we had some trend line somewhere here, and that has been blown out of the way. We have somewhere another trend line here, and that is entirely out of the way as well. I told you guys, you see, patience pays in this business. You have to be patient, otherwise you end up blowing your account, and by the time the market is actually ready to give you any chance to make money, you're out of capital. All right, stay patient, guys. So a decent pullback to this region of 0.88750, we should actually have a decent opportunity to ride this guy all the way up. So my prime target for my first level target for this guy is at nearly 200 pips, which is 0.990788. Now, if we do breach that level, we should actually see a full-blown trend on this guy to 0.94000, which is a prime target. So that's about UsdChf. I'm monitoring my battery percentage because I would have to summarize this as fast as possible. So the second to the last pair on my list would be the dollar index. All right. So now for the dollar index, there's something that I want to show you guys real quick. I need you guys to see something and look from my lens. Look through my lens. Look through my lens, the lens of an experienced young guy. So we do have a potential reversal sitting on our hands here. We do have something that seems to be looking like a bullish continuation. I mean, I'm not saying it is a bullish continuation, but it is looking like. All right, so we have this inverted head pattern playing out here, and now if you scale onto the daily time frame, we have these flag patterns. So the market has flagged from this trend line here. We are flagged on the daily time frame. We are flagged. However, we do have a bigger trend line, all right, to worry about, which is coming from the weekly time frame. Now, the weekly time frame trend line is still in play as we speak, still in play. However, the daily time frame trend line seems to be taken out of the way. So this is the weekly time frame. All right, the weekly time frame is still in play as far as I'm concerned. We still have a lot of work to do on the dollar index. If we are actually very serious about blowing out of this range, we do have a lot of work to do on this. But actually, no, we're at okay. So the weekly time frame candle trend line is broken out, the daily time frame is broken out. Okay, however, we still have some form of resistance here, and if you look closely here, this is a flag pattern, and this flag pattern in historically this serves as a continuation pattern to any trend. If this happens in a bullish market, this is going to continue rising. All right, so we do have this stretch, bounce. So if we fail to sustain above here, we should see this guy rally all the way back to this point here, all right, which is 99.086. However, from a bullish standpoint, from what I'm seeing here, we have a daily candle break and close above this resistance and above this trend line here. However, to be a lot more convincing, all right, it has to come and clear this level at 104. All right, this recent high at 104.976 would be a key level. All right, so the market has to come and clear. If we can indeed clear this level, then ladies and gentlemen, we have a full-blown reversal, and this would obviously determine what the overall trend for the year 2024 will be across the financial markets. All right. So once again, this guy has to come and clear 104.430, sorry, 104.982. All right. Around here. So we have to clear this level here, something like this. Yeah, we have to. We have to break above, like intentionally break above. Don't give me this because this could end up being a fake out and then we rotate all the way back down. All right, unhealthy. So we need to clear this space. This is a flag pattern. Let us clear out of here. Okay, from bottom to top of this flag pattern, we should actually see a decent breakout. And continuation. All right. So let's see if we are able to hold above this resistance here, these two resistance here, especially 104.854, then we are back in business. The market is about to give us a full-blown reversal or continuation in this case, all the way to the all-time highs of 114.800. All right. So that's that for the XY. Now the last pair on my list is gold. Now, gold seems to be self-explanatory, but I'm just gonna do this because you guys are, most of you guys are actually new to my channel. Once again, my name is Desmond Samuel. Okay, so overall on gold, we've been very bullish, actively bullish. Okay, intentionally bullish. However, as with every stretch, we need to see a pullback. All right, so we've not had any decent pullback on this guy. We did see some bullish momentum happen during FOMC. However, that didn't sustain. Instead, this looked more like a liquidity grab here. All right. So now we're having something that is like a double top on our hands. And for us to validate this, he has to break the neckline and pull back. All right. For those of you guys who are counter trade traders, we need to see us break below here, pull back, and then drop it to this key level. Potentially, he wants to come to this key level. Now, I don't know if he wants to get to this point or he wants to consolidate above this level. I'm not sure. But judging from Fibonacci, we should actually see a decent pullback to the key level before we now have a decent chance of riding this guy all the way up to the upside. All right. So once again, I'm bearish on EurUsd, JPY, NzdUsd, AudUsd, and bullish on UsdChf. 80 actually 70% bullish on the dollar index, and then I am actually bullish on gold. All right, provided we stay above this key level. Okay, so that's that for this episode of our weekly outlook. Once again, my name is Desmond Samuel, and if you're new to this channel, if you enjoy this content and if you want to see more of this, click the subscribe button, hit the like button, and then turn on the post notification so that whenever I drop a post like this, you will be amongst the first few to see it. And once again, you can sign up using my recommended broker in the comment section, and then find the link to my Telegram community if you want to meet like-minded traders like you. Thank you so much, and see you guys in the next episode. Have a profitable and a very solid trading week ahead. Thank you so much, and peace out.